Tonight we're going to talk about scanning for trading ideas, which is a pretty fun topic. And we've talked about this in the past, but we're going to just go over some of the stuff that we've talked about in the past and sort of summarize it. And I'll show you kind of what my process is for when I scan for stocks to trade each night. So a couple housekeeping things first. These concepts are going to work best for short-term day traders and swing traders. That's what I am, whether it's trading options or stocks or Forex or futures or whatever. As long as you are short-term trading the charts, then these concepts are going to work for you. They can be used, however, to better time your entries for long-term investments as well. The only thing I would say is if you are a longer-term investor, then use weekly or monthly charts as opposed to using the daily charts to scan for your ideas, because that way you have sort of a longer-term time frame where these patterns can play out. So they can help to better time your investments for better time your entries and exits for longer term positions, but primarily these concepts are for short term day traders and swing traders. And lastly, just because this is a scanning webinar, nothing here should be considered a recommendation to buy or sell anything. I'm not a financial advisor. I don't want people going out and throwing their whole life savings on some low float penny stock saying, Chris told me to do it on Discord, and then I end up going broke because somebody sues me. So nothing here is a recommendation to buy or sell any security. So just keep that in mind. So I use three primary tools for scanning for stocks. Number one is Finviz, number two is Stockfetcher, number three is TradingView, or I actually use Tastyworks and Thinkorswim, but you can use TradingView if you don't have a broker with special charting software, and TradingView is a free option. So we'll go over what each one of these are. So Finviz is, first of all, it's a free tool. They do have a paid option as well, but I only use the free version. This is really good for quick scans. It doesn't give you much in terms of customization of the stuff that you're looking for, but it is free. It's a very compact layout, which is nice because you can quickly scan a lot of charts that way. And it's just, it's got a lot of different features that you can use without having to pay for anything. So that's obviously really nice, especially if you're brand new. So I'll show you how to use Finviz to find trading ideas. The other tool that I use, which is a paid tool, it costs about $25 a quarter. So it's cheap. It's like $8 or $9 a month. That's called Stockfetcher, and that allows you to write custom scans. So if you know what you're looking for on the charts, then you can write some code in a sort of human-friendly syntax that allows you to really fine-tune what you're looking for. So I'll show you some of the scans that I use through Stockfetcher as well. And then TradingView, either TradingView for charting or whatever software you're using, whether it's Tastyworks like my broker or Thinkorswim. Interactive Brokers is another one. There's DAS Trader if you use like Speed Trader or Centerpoint or something like that. But these are tools for doing more in-depth chart analysis. And usually what I do is I find the idea on either Finviz or Stockfetcher, and then I'll jump into TradingView or my software in order to look at it in more detail and look at the longer term outlook. So those are the primary tools that I've used. And when I look on, we'll start with Finviz here. So when I look on Finviz, I'm normally looking for two different types of things, either long trades or short trades. And what I mean by long versus short, if you're new, is not long term versus short term, but long as in buying to own the stock versus shorting in short selling. So if you're not familiar with short selling, look up what that means. It's pretty simple. Basically what it means is that you are first selling stock that you don't own, and you will profit if the stock goes down because you can buy it back for less than you sold it for. So it's effectively buy low, sell high, except in reverse. You sell high first and then buy low. So I have three primary questions when I look at trading ideas on Finviz, and they're split into either long trade or short trade questions. So when I look for longs, when I'm looking for stuff to buy, thinking it's going to go up, my My three primary questions are: number one, did the stock close at or near its highs? Number two, is it up more than like 50, 75% and or is it up more than 5 days in a row? And number three, is it high enough, if that's the case, to justify a parabolic short? And I'll put in the YouTube recording of this, I'll put a link to the description of last week's link in the description to last week's live stream where we talked about timing parabolic trades, because that's a key concept in this process. So basically what I'm looking for is, did the stock close at or near its highs? If so, then I want to know if it's up 50, 75, 100%, or it's up more than 5 or 6 days in a row. And if it is, then I start questioning, because sort of the long move at that point is over, at least for the short term. Then I start questioning, is it high enough yet to justify short selling it and going counter trend? So those are the three long trade questions, and we'll look at those in more detail in a few minutes. The short trade questions are exactly the opposite. Did the stock close at or near its lows, meaning at or near its low of the day, not necessarily at or near its all-time low or its 52-week low, but just at the low of the day, right? Because we're looking for short-term trading opportunities. So did the stock close at or near its lows? Is it down more than 30 to 50%? Or is it down more than 5 or 6 days in a row? And if it is, then is it down enough for me to justify buying it and expecting it to bounce, as opposed to continuing to try to short sell it when the short selling move is probably over at that point? So again, there'll be a link in the description for the timing of those parabolic trades, and it was a live stream that we did last week. So that'll be really helpful if you are doing these types of scans. So the rationale behind these questions is that when a stock closes on highs or lows, it indicates conviction in the move, right? It means that people are confident and convinced that the stock should either be going up or should be going down. When you have a big wick on the top of the candle, like a big tail at the top or a big tail at the bottom, it indicates uncertainty or indecision, because the stock, in order to form that candlestick, the stock had to go up a lot and then fade off at the end of the day, or it had to drop a lot and then bounce at the end of the day in order to form those big wicks on the top or the bottom. Or maybe it's just, the body of the candlestick is in the middle of the candlestick and there's a wick on the top and the bottom, which is even more uncertain as to what the real conviction of the move is. So my rationale behind looking for trades that closed on highs or lows is that it indicates conviction and gives me more of an edge in determining whether I think that the trade is going to continue higher or continue lower if it's closing on its lows. Number two, that second question about if the stock is up or down more than 30 to 50%. For up trades, I look for a bigger move because it's pretty uncommon to see a stock shed, 75% of its value. But if a stock has bad news, it's relatively easy to find, stocks that move 30, 40, 50% to the downside over a period of just a few days. But it is a little bit higher. It's a little more common to see stocks go up 75 or 100% than it is to see them, shed 70 or 80% of their value in just a few days. So the rationale behind that second question is that in general, markets tend to ebb and flow, right? There's periods of higher highs and higher lows in an uptrend and lower highs and lower lows in a downtrend. You'll see the market move up and down as it moves in the overall direction, whether that's up or down. When a stock just kind of goes straight up or straight down for 5, 6, 7 days in a row, traders start to take profits on that. So, once a stock is up 5 or 6 days in a row, then I start to become a little bit more averse to entering into that for a long trade, because I'm going to start running into a lot of traders that bought it 5 or 6 days ago that made a bunch of money really quickly, and they're going to start to sell it, which puts selling pressure on the stock. So after the stock is either up or down 5 or 6 days in a row, then I start thinking the opposite direction. And number 3, is it high or low enough to justify it bouncing or becoming a parabolic short if it's a trade that's gone up 5 or 6 or 7 days in a row? This is the rationale behind that question. If the trade is too high to long it, meaning it's gone too crazy too quickly, or it's just fallen off the face of a cliff and it's been dropping for a week straight, the opportunity really is not in the same direction. It's more in the opposite direction. So normally, once I see that, I start just kind of thinking the opposite direction. So that's the rationale behind that last question, is just to give myself an option if the stock is going completely one direction. I might have missed the initial trade, but there's still an opportunity in the opposite direction. So that's the rationale for the last question. And then finally, wicks at extremes. So I talked about how these wicks indicate uncertainty or indecision, but wicks at extremes, meaning if you see a stock that has fallen off the face of a cliff and it's dropped for 6, 7, 8 days in a row and it's down 50%, and then on the last day, you see that it has a big giant wick on the bottom of it, like the stock face planted in the morning and then got bought up all day long and closed either green or closed pretty close to where it opened and left that big tail on the bottom. That's a really good reversal signal. And the same is true for stocks that have gone up a lot in a very short period of time and then put a big wick on the top of the candlestick, indicating that it tried to continue higher, but towards the middle of the day or maybe towards the end of the day, it was sold off and it ended up closing significantly lower than where it started. So wicks at extremes can be good reversal signals. So I do pay attention to them there, but in general, when I'm scanning with Finviz, I want to look for stocks that have closed either at their highs or at their lows, because those are where the real opportunities are that haven't gone sort of too much for me to really justify trading them. So where do we start? Where do we find these opportunities? Well, there's 3 different places, and we're going to look at them in just a moment. Number 1 is the top gainers and losers list, which is right on the Finviz homepage. And then there's 2 other screens that I use on Finviz, which are just built-in screens. One is the screen for unusual volume, and the other one is the screen for the most volatile stocks. So let's look at a few examples of these. So right on the Finviz homepage, if you're not familiar with Finviz, this is what it looks like. Right on the Finviz homepage, there's these different signals. So you have top gainers here, top losers on the other side, and then there's unusual volume here, new highs and new lows. So there's a bunch of sort of built-in signals, and you can access them either from the homepage or you can access them on the screener via this drop-down box here at the top. So you have top gainers and losers, new highs and lows. There's a bunch of different ones, right? But I tend to stick with the top gainers and losers primarily because those are the ones that are in play. Those are the ones that everybody's watching. And then unusual volume, I like that screen because it gives you, sometimes it can give you an indication that a stock there's a lot of people piling into a stock before it really moves. So sometimes you'll find, the more like under the radar stocks that are making moves on the unusual volume scan. And same thing with the most volatile scan. I don't use that one as much, but top gainers and losers I use a lot. So let's start with the top gainers and we'll go through what those 3 questions are. So if I go to the charts tab and then I'll set it on candlestick just to get rid of all the extra lines and everything on these charts. I don't really need that stuff when I'm just scanning because all I'm looking at is really the overall pattern. So this is how you can easily scan through hundreds of charts in order to find stocks that have closed on their highs or stocks that have closed on their lows. If I'm looking on the top gainers list, obviously I want to look for stocks that closed on their highs, because primarily I'm looking for trades that I will buy. And then top losers, I'm looking for stocks that I would short sell, primarily. If it's gone too much in one direction, then it would be the opposite, but we'll talk about that in just a second. So this ADAP is a really good example of what I'm talking about with there not really being any conviction in the trade, right? The stock is up 127.78%. So humongous move. It obviously has some positive news driving it. Massive volume, over 100 million shares traded on Friday, but there's not really any conviction one way or the other, because you have this huge $2 wick on the bottom and almost a $2 wick on the top. And the body of the candle is kind of sitting right in the middle of the candlestick. So, if you buy this thing at $11 first thing in the morning and it starts to take off, the first thing that you're going to run into is all the bag holders who bought it on Friday and are holding it from, $12 a share or whatever. They're going to start selling in order to take their losses off or escape with a break-even trade, unless they have a lot of conviction. So you have that resistance already. And then same thing on the downside, you have, people that will be buying it because they might have missed it the day before or whatever. So there's really no conviction in this candlestick. So this is a type of trade that I would either just put on the back burner, or I would just kind of ignore it until it forms a better pattern. On the other hand, you have stuff like this ALRN. And ALRN is a good example of a stock that has gone up too much for me to really justify short selling, or too much for me to really justify buying it at this point. It's gone from about 75 cents or so to, $1.60. So the thing is better than doubled in just 1, 2, 3, 4, 5, 6, 7 days. So this is up too much for me to justify buying it with any real conviction, but it's approaching that look from the presentation that we did last week about the parabolic trades. It's approaching that look of looking like it's about to blow off. So if this gaps up and keeps going, then this might be a good opportunity for a parabolic short. And it is still strong, right? Because it closed right at the high of the day on Friday. So there's a good chance that this thing could gap up to $1.75 or $1.80 and then have a big morning push up to $2 and then fade off the rest of the day and start a big downward move, back to 120 or 130. So that would be a really good short opportunity. So this is what I'm looking for on the top gainers screen. And on the top losers screen, I'm looking for exactly the opposite. So I'm scanning through these stocks, looking for stuff that has either gone down too much and might be at a point where it could bounce, like this Canon here, or Canon, whatever you want, whatever this is called. This is a Chinese computer hardware company, from $6 down to $2.30 something in just like maybe a couple weeks. So, this is a humongous drop, almost 70% of its value. So that's a huge, huge downside move, and it hasn't really had any rest. The only apprehension I would have to trading this for a bounce is the fact that it's a Chinese company. So I would want to know what the reason is for the sell-off, because if it's something like they're suspected of fraud or something like that, obviously I don't want to be dabbling with that. So some of the other ones here, let's see if there's any other good ones on this screen. I don't use this scan quite as much, but I do look for things like this CORR. This is looks like it's a REIT, a real estate investment trust. And it had this support back in March around $10, and it's been kind of dangling right above $10 a share. And it looks like the volume came in just a little bit towards the end of the week last week. So if this breaks under that $10 line, then we could see a secondary move downwards. So this would be a good potential short sell because it's low risk here, right? If it breaks under $10 a share and it starts moving down, you just put your stop loss right back above $10 a share. And if it bounces and takes out your stop loss, then you take a small loss. And if not, then you just kind of let it run. So there's the top gainers and top losers. And then let's also look at the unusual volume scan. This is another good example of this Ajax Therapeutics. Another good example of one that has this humongous wick on top of it. This is not what I'm interested in, right? There's just too much. There's too much uncertainty, and plus this is a super thinly traded stock, average volume of only 84,000 shares. So I wouldn't touch this, but it's a good example of what I'm not looking for. Okay. So Aileron, Digital Ally, this one is interesting to me because they make body cameras and police equipment. So with the protests and stuff that are going on right now, this one could be interesting to watch as well. And you can see it was up 33% on Friday, and there was no news on Friday for this. There were no upgrades or downgrades. There were no SEC filings. So this one just kind of popped up out of nowhere. And I remember this stock from back in 2014 when there were riots in Ferguson in Missouri. It went up like 750% in like just a month. So this one is definitely on watch. I've been watching that one now for the last couple of days. I picked it up yesterday on a scan and just kind of noticed that it had shot off. So I'm going to be watching that one next week as well. But those are the three screens that I use on Finviz. So top gainers, top losers, unusual volume, and just a few examples of what I'm looking for. So if you have any questions about that, again, you can just type /question with whatever your question is, and it'll go into the questions channel, and then I'll get to it at the end of the night. So let's move on to Stockfetcher. Stockfetcher is a pretty awesome tool, and I've used this for years now. It's probably paid for itself like 100 times, right? Because the thing's like $8 a month. So if you make one good trade that makes you like $500, it pays for itself for like 10 years. So it's definitely, it's a cheap tool. I really like it a lot. And so I have a few different scans that I'll go through. These are custom scans that I've written. And these are three of my favorite ones. I've got like probably 40 or 50 different scans, but these are the ones that I find consistently return, high quality charts that tend to move in a predictable way. The first one I call 70-50 runners, and this is sort of similar to what I'm looking for in the Finviz top gainers list. I'm looking for stocks that are up more than 50% in 7 days, and those I put on watch for short selling. The second one is looking for bull flags, and I'll show you what that looks like when we look at examples in Stockfetcher. But that scan is just looking for stocks that form a bullish flag, and I'm keeping those on watch for breakouts. And then I have 4 other scans, which are all based on strong momentum. So I have strong momentum up and down, and I have strong momentum up and down that set new 52-week lows and highs. So what that scan is looking for is stocks that closed at or near their highs and potentially set a new 52-week high, or stocks that closed at or near their lows and potentially set a new 52-week low. And those are typically just going to be on watch for continuation, either higher or lower, depending on whether the stock is going up or down. So let's look at some examples of that. So this is Stockfetcher, and so over here on the left, these are all the different scans that I've written, and a lot of these need to be redone. I don't really use them, so they're just kind of they're old. But I do consistently use the 4-day bull flag scan, the 7-day 50% runner scan, and then these are the strong momentum ones that I was pointing out. So strong Momo, up, down, and then with and without 52-week highs. And then over here on the right of this box, it shows you how many matches there were. And then there's a little globe here, which will allow you to turn on a global filter to, like, for example, if you want to only look at stocks that have, say, more than 500,000 shares of average volume, you can put that in your global filter, and then you can turn it on and off for different scans. And then on the right-hand side, this is the actual scan. So on this one, just to give you an example, I set a couple of variables here, one for 7-day change and one for the 2-day change. And then I'm showing stocks where the 7-day change is greater than 1.5. So in other words, the close today divided by the close 7 days ago is greater than 1.5, which means that over the last 7 days, it's gone up at least 50%. And then the 2-day change being greater than 0.95. And what I'm trying to avoid with this is stocks that have been going up for 7 or 8 or 9 days in a row, but then pulled back like 50%. I'm not really interested in those anymore. So I'm using this to make sure that they only pull back at a max of about 5%. And then there's an average volume filter here, a couple of market filters to make sure that they're not ETFs or OTC stocks. And then the rest of this is just sorting stuff. So I sort them based on column 6, which is the 7-day change. So it's going to sort based on how much they've gone up over the last 7 days. And then add a few columns for average volume and tell it not to draw some stuff on the charts. And that's it. So this is how Stockfetcher works. It has this really cool, like almost human-like language that it uses. So even if you're not a coder, it's really useful and it's pretty easy to use. And there is also like this big, like 150 something page usage guide that has like little exercises in it that you can use to learn how it all works. But it's a pretty awesome tool for $7 or $8 a month. So I definitely use this a lot, and I've used it for, God, at this point, probably at least 6 or 7 years. But this 7-day 50% runner scan, you'll see that it finds some pretty similar stuff. It did find Aileron Therapeutics here, which was also on the top gainers list. And then there's a couple of extras here like Mersana Therapeutics. I didn't see that one on the list of top gainers. And that might be because it wasn't a top gainer on Friday because it was already up from, 10 to 20, and then it only went up to like 22. So, it was only up like 10% on Friday, or 14.98% on Friday, which might not have been enough to put it onto the top gainers scan on Finviz, but it's enough to show, it's enough to pop up here because I'm looking at it over the last 7 days. So this is one of them, and you'll see that the patterns that I'm finding on this are pretty similar to what's on the top gainer scan on Finviz, but it does find some extra stuff which Finviz misses. So that's what I'm looking for with this one. Bull flags. This is a very common pattern in trading, and you might also know this as an ascending triangle or a wedge. It's a pretty common pattern, and what you're looking for is a stock that has a big move upwards and then like a 4 or 5 day long sideways consolidation, because this indicates that people are taking profits on their trades from back here, but it's not enough to drive the stock back down because there's still people that are buying this. CLSN, for example, it looks like there's still people buying it. Let's see if I can zoom out a little bit. It seems like there's still people buying it in like the $2.80 to $3 range, which is why it keeps holding up. So that's what a bull flag looks like. And this is a bullish pattern, which is pretty common in day trading and short-term swing trading. So you can see it again here on BJ. Similar pattern, right? There's a big spike up and then like a 3 or 4 day sideways consolidation. And what I'm looking for on these trades is for it to break over the high of the flagpole. So in this case, I would expect this to probably take off again if it can get over 37.50 or 38 area, because that's where the top of the flagpole is there. So that's what I'm looking for with bull flag. So I have a scan for that. And I really like I like CLSN here. I don't know if I like it for a bullish move, only because it's up, from $1.30 to $3. So it's gone up like over 100%, really in a really short amount of time. So it might need a longer period of time to consolidate that move. But BJ's is a better example because it was just a quick $5 or $6 pop, and then it consolidated sideways for a few days. So this one might be, a more like a less volatile, more traditional bull flag breakout. So BJ's ramp was another one. It looks like it tried to break out on Thursday and failed. That's what this wick here indicates. And then it recovered on Friday, and now it's pushing right up against $50. So this one might be interesting to watch as well. So this is the bull flag scan. And these are some of the things that I'm looking for. And then lastly, let's talk quickly about the strong momentum scans. This one is similar to the top gainers and top losers as well. This scan looks for, so it has a few different things that I'm looking for. So I set a few variables for the range, and then the bottom and the top of the body of the candlestick, and then the size of the top tail and the bottom tail. So I'm basically breaking the candlestick with these variables. I'm basically breaking the candlestick into chunks. So you have the top tail, the body, and then the bottom tail. And by doing that, I can then compare the size of the top wick to the entire day's range. So if I do that, then I can say things like show stocks where the volume gained 100% in the last 2 days and the top tail ratio is less than 40. So what that means is I want the wick on the top of the candlestick to take up less than 40% of the entire range from the high to the low. And actually 40% is pretty high. You'll see that one picked up ADAP here. And I really don't like these big wicks on the top and the bottom. So this is what Stockfetcher is really cool for, because you can, like, if I want to eliminate that in my scans, I can just shrink this down to say, I want the top tail ratio less than 20%, and then fetch again. And now I end up with only stocks that pretty much closed on their highs. So that eliminates a lot of the stuff that was in there before. So maybe 30% might be better to give me a few more options. So now we have this WSM, for example, that has like a little bit of a wick on top, but it still closed pretty close to the highs. So this is where Stockfetcher really shines in my experiences with really customizing your scans. And then the other cool thing that I can do with it is, like, if I want to see what matched it previously and what the performance since then has been, this gives me a way to sort of back test my scans, which is pretty nice. So strong momentum up, and we need to reset this and go back to today. So strong momentum up, I'm looking for stocks that closed at or near their highs for a continuation upwards. Don't really see anything on this except for maybe Zynga and AOBC. Actually, this is Smith & Wesson. This is the outdoor brand of Smith & Wesson, so all the camping stuff. This one could be interesting also come next week because of the protests. I believe they're actually spinning off, what's today, the 31st? Yeah. So tomorrow they're actually spinning off the gun and ammo portion of their business into a new ticker called SWBI. So that one I believe is going to start trading tomorrow, and this one is going to become only the camping stuff and the outdoor equipment. But still, this is a good example. You can see the volume coming in already because it looks like people are anticipating that there's going to be increased ammunition sales and gun sales. And this is typical when there's social unrest. So strong momentum up, strong momentum down. There were none on Friday. And then there's a bunch that had strong momentum but did not make a new 52-week high. And these might be also potential longs. So hopefully that makes sense. That's Stockfetcher. And then for TradingView, usually what I'm using either TradingView or my brokerage software for is doing deeper technical analysis. So let's take something like, what was that one that we were looking at on the top gainer list? ALRN. So if we look at ALRN, for example, in TradingView, I can zoom out now and see, kind of what the bigger picture is. This stock has been destroyed since July of 2017. I don't know anything about this company from a fundamental standpoint, but it seems like there is some resistance kind of around the $2 mark. So to me, it would be quite interesting to watch this around $2 because that seems like sort of an inflection point. And this would be a really good place in my experience to start considering it for a short sale, because if it stops, if it pushes up to, $2, then it's gone from about 65 cents to $2 nonstop without any rest. So some people are got to take profits eventually, right? So $2 would be, a nice round number. It's got a prior inflection point there looking back at history. So that might be an interesting place to keep an eye on it. So that's one of the things that I use TradingView for. And if I'm not using TradingView, then I'd be using like Tastyworks or Thinkorswim. TradingView is just nice because it's online. So you can just jump on here, quickly type in a stock. You don't have to open your software, which is pretty nice. So that's what I'm using it for, is marking up the charts, checking the different indicators. If you use like moving averages and stuff like that, you can add those onto your charts here if you use those indicators. And because you can't really, I guess you can do it with Stockfetcher, and you can use like the technical view on Finviz here. But this is just sort of messy to me. It's hard to really see what's going on with this. So, being able to zoom in and out and pan left and right and adjust the scale and stuff like that, this can really help in your process of technical analysis. So that's what I use TradingView for. And then also noting, like I did here on ALRN, noting like the past support and resistance levels. So back here in August of 2018, it was there was support around $2, and then when it finally broke under that support, it had a big sell-off down to under $1, and then it started resisting that $2 in March of 2019, and now we're just coming back into that resistance right now. So I would expect there to be potentially some bag holders, right, that might have bought this stock like over here on these big days and held it too long and watched it bleed away to 40 or 50 cents. And now finally, after months and months and months, more than a year, they're potentially getting back to break even. That's a hard emotion to overcome. So it's likely that we see some bag holders provide resistance there, and that'll put selling pressure on the stock around that level. Okay, so putting this all together, The ultimate goal here is to build a watch list of stocks. So what you want to do in terms of narrowing down your list, right, is you look through all of these companies and you look at the charts, you do your analysis on TradingView, you look at whatever scanning tools you're looking for, right, and you get a bunch of ideas. Maybe you have, say, 20 ideas. And then from there, you narrow them down to the ones that have really clean chart patterns. And that'll eliminate probably half of your stocks. And you also want to focus on the ones that have, generally speaking, higher volume is better because they're just more liquid. They're easier to get in and out of. So narrowing your list down based on the chart pattern, based on the average volume and relative volume, with focusing on the higher volume stocks. Once you have that sort of knocked down, then the third thing that I would probably focus on would be the news. And I would give priority to stocks that have a reason to move and that aren't just popped up for no reason. And then lastly, float and short interest. I've talked about these in past streams. In general, lower float is going to give you more powerful breakouts because there's less supply. And higher short interest is going to give you more powerful breakouts to the upside. So high short interest plus low float is a really good combination for long trades. High short interest on short trades is the opposite. So I prefer to have less short interest if I'm short selling. So I went through and picked out the ones that I really liked earlier. So I do like that ALRN. I like that as a parabolic short if it gaps up and pushes towards $2. I do like BJ's for that bull flag breakout over 37.50 or 38. And I would call that one broken under around $35. So what I mean by that is if we look at the stock and sort of zoom in here, this is the pattern that I'm sort of paying attention to, is this bull flag pattern. Looks like a pennant. So if it breaks under like $35 underneath this lower yellow line, then the pattern is kind of broken. So I'm looking for it to either break above the yellow line, the top yellow line, or if it breaks below the lower one, then I would just take it off my list and I wouldn't trade it. So that's what I mean when I say that it would be broken under $35. Because remember, we're trading for short-term gains. We're not trading for, making a long-term 10-year investment, right? This is just to make a quick buck and then get out. So if it doesn't work, it doesn't work. Splunk is another one which I apparently picked out but didn't notice on our second time through. So let's take a look at that. It says it's a bull flag breakout over 187, and I would call it broken under 180. So Splunk, yeah, so this one's not as nice because it's come all the way from 100 to almost 200 now. So this thing has doubled in just the last few months. So this one is a little bit more exhausted than BJ's or some of the other bull flags that I found. But the one thing that is nice about this one is it's breaking out to all-time highs, so it doesn't have any resistance in order to stop it. So that's always a good sign when there is no resistance. So over $187 over the top of this flag, this one could continue upwards towards 200. And if it breaks under this lower support area here, then I would just call it broken and I wouldn't touch it anymore. And then the last ones are DGLY, Image Sensing Systems, this ISNS. This one doesn't look like much right now, but back in 2015, 2014, when DGLY took off with the riots in Ferguson, this one went with it from $2.50 up to almost 10 in just a few days. So that one is worth watching as well, in my opinion. And then AAXN, they make tasers. So all of these companies, DGLY, Isness, and Axon, they're all involved in the crowd control or police and law enforcement or protest sort of market. So those ones are all going to be on watch given the current situation with these protests. So I think that's it. Yes, that is the last slide. Okay, so questions. If anyone has questions, feel free to /question them, put them into the questions channel, and we'll take a look at them. And I'm also going to look at the ones on Twitch because there are not, there's none right now in the main questions channel. So let's take a look at the ones on Twitch. We're going to have streaming inception here. I'm going to put this on the other monitor. All right. So one of the questions is, what is a clean chart pattern? And the answer to that is just one that's not all over the place. So somebody else actually answered that in the chat, which is, it's a really good answer, and that's true. So a clean chart pattern is something like BJ's, right? It has clearly defined support and resistance in it, and it's not messy. One of the other ones that's pretty clean is CLSN. So this one has pretty clear support and resistance as well. Assuming you chop off this big wick up towards 360-ish. I don't really like that, but the support on it is pretty clear. So as long as it stays above this sort of yellow line here, I think this one is a pretty good, clean pattern. But it is just up a lot. So I don't know if that's really one that I'd be more short biased on this one, to be honest with you. I'd be more willing to short sell it if it broke under $3 or under like $2.75 with a stop back above $3. But it is still grinding higher. It's just like the volume just kind of disappeared after this initial 4 or 5 day run. The volume just evaporated. So the real question is this going to break over that 325 area? If it does, then it could very easily squeeze much higher to $4 or $5, but time will tell. So this is one that I'm just kind of watching, but that's an example of a clean pattern. All right, let's go back to Discord. El Basto, which morning calls do you hear? What do you mean by that? What do you mean by morning calls? In the meantime, Pigeon, can you explain about the short interest and why you like it for long and short? Sure. So, and Big Raf, yes, I'll make the PowerPoint slides available. I'll put them in the description of the YouTube video. Pigeon, so short interest, if you're not familiar with what short interest is the percentage of the shares that are currently held short by people that have an open position. So basically people that will profit if the stock goes down. So if we look at the screener, and on Finviz it's called float short, but this is effectively short interest. So if we look at stocks that have greater than 20% short interest, all of these companies, there are more than 20% of the people that are holding a position in this company are holding it short, meaning they'll lose if it starts going up. And the only way that those people can get out of their positions is to buy to cover, meaning they have to buy shares in order to close their short position. So a stock like Blue Apron here, this is actually a really nice pattern. Let's pull this up on TradingView. And what's the volume like on this? So average volume of 4 million shares, so that's nice. But look, it's got 30% almost 31% short interest, and it's only 9.6 million shares in the float. So what that means is that there's under 10 million shares that are available to be traded in the public markets. Everything else is going to be either locked up by insiders or held by institutions, or it's just not part of the public float, so it can't be traded. And 30% of those shares are currently held short. So the reason that this is interesting to me is because we have this sort of bullish flag that's developed off this like little miniature flagpole. So it had this huge run, and then looked like there's resistance or support like around $10, because it was kind of bouncing off of $10 for a while, and then it finally broke underneath it, and now it seems to have bottomed out around $6.25 or so. And the reason that this is curious to me is with 30% short interest and only 10 million shares in the float, if this takes off, it has a huge number of people that will be losing, if it breaks out sort of above $10. If it really takes off, there's a lot of people in this stock that will start losing, and they're going to have to panic out by buying, which means people that don't panic out that are losing because it's going up will become even more panicked. And that causes this sort of chain reaction, which results in what's called a short squeeze. And that's really what causes these humongous moves like this did back in March, where it went from $2 to $30 and then back down to 12 in like 3 days. So this one is going to be interesting to watch. I think over $10 a share, if this starts to heat up, we might see it take off quite a lot. So that is what short interest is good for. But on the other hand, if it's a stock that is going down, then 30% short interest doesn't really mean much, right? Because all those people are making money. So it's not as enticing to me if it's not a long trade. Okay, cool. So in theory, it could be a cool idea for a bull to set a limit buy around 10.05 and wait for the short squeeze. Generally, you don't want to try to predict this stuff. If a short squeeze happens on one of these stocks, it's going to be a humongous move. So, I mean, look what happened back in March. It went from $2.50 to almost $30 a share. So I don't really care about timing it perfectly. If the thing is going to run from $10 to $35, if I can catch like a few chunks of that along the way, that's fine by me. I'd much rather have low risk and high conviction than try to predict it. But yes, the theory, right, would be maybe not to set a limit buy at 10.05, but just to have that sort of on your radar, so that if it does break above that level, maybe you get an alert or something like that, and you can take a look at it and see if it's giving you a good low risk opportunity. All right. Siam, the last one was ISNS. ISNS. That one is a little shady. It's not even really a protest play. This company makes their primary product, I think, is like traffic cameras and video surveillance stuff. So they're not even really like related to the riot stuff. It's just in the past when DGLY took off back in 2014, it had this humongous run this was the riots in Ferguson back in 2014. And, it went from $2.50 or $4 to $34. And ISNS was like, it was almost exactly the same pattern. it was just a few days later, everybody got bored with trading DGLY, and DGLY started to crash, and everybody kind of rolled into image sensing systems for some reason. So it hasn't moved yet, but I just have a feeling if DGLY takes off, that this one will be the next to go. The other one that's interesting right now is this Wrap Technologies, WRTC. They had a big move on Friday as well, and these guys make crowd control stuff. They have like a little grenade launcher thing that shoots out like a net, like in a cartoon. So this is kind of a interesting company. It's relatively new. It looks like they just IPO'd in like June of 2018. So it'll be interesting to see where this one goes, because there aren't very many of these like crowd control type companies. So DGLY, ISNS, Wrap Technologies, and then Axon, AAXN, these guys make tasers. So this one was big in 2014 also. It wasn't as explosive because this one's more of like a real company. This is like a $5 billion company. So they have like, actual sales. But it even went, even this one went from like $10 to 36 over the course of a year. So this one could get a little heated up again as well. I don't really know any other ones, but what would be interesting is if we could find like the companies that make like pepper spray and the riot shields and stuff like that. And also glass manufacturers might be interesting right now. Yeah, ISNS hasn't exploded yet, and the protests have lasted 6 days already. Yeah, I mean, that's kind of how it was in 2014 also. DGLY went first. Well, actually, Taser went first. This Axon, AAXN, it used to be a company called Taser International, and they took off first, and then DGLY went, and then ISNS went like a few days later. And I think there were a couple of other ones as well that took off, but those were the three main ones. So just because it hasn't gone yet doesn't mean that it's not going to. I've definitely seen them sort of pop out of nowhere, and one day it just gets pumped up by some day trading chat room or something like that, and all of a sudden it's up 50% in one day, and everybody's getting squeezed, and the next thing you know, it's up 800% a week later. So they do tend to come out of nowhere when they're super low float and thinly traded stocks like this. So you just have to be careful with trading these because they go down just as fast as they go up. So you can't really chase them. Okay, any other questions? Are there any other questions in here? Nothing else in here. There's one other one in the Twitch channel that says, how does the looting and protest affect retail stocks? So I don't think that retail is really going to be affected by this. And the only reason for that is these companies like Target and AutoZone and the Dollar Tree and some of these like national brands and global brands, they're just too big to really be affected by people looting or destroying one or two stores. So if the protests spread and it starts to take on like if it starts to get bigger and we see more and more of these stores being destroyed, then sure, maybe it would affect things, but I still think it's unlikely, also because they're probably going to have insurance to cover stuff like this. So it's unlikely that a company as big as like Target or AutoZone or any of these other big ones that are being hit, it's unlikely that they're going to really see any effects from it. It's probably, unfortunately, the ones that it's going to hurt are the small businesses and the locally owned stuff that they don't have billions of dollars in cash flow in order to just build a new store or buy some new glass. All right. I think that's it. One other question. What's the best way to develop a scanning system when paper trading? TOS won't screen pre-market or after hours, and Finviz you have to pay. Is it best to trade during regular hours at first when paper trading? Yes. So yeah, so Finviz is delayed if you aren't paying for it. Thinkorswim should have a pre-market scanner, I thought, but if not, there is a, I want to say it's premarketwatch.com. What the hell is that? Pre-market watch. Oh, here it is. The stockmarketwatch.com. This site has, so this site has a pre-market screener, which is, it might still be delayed, but it's only delayed by 15 minutes. Finviz doesn't start showing stuff until after 9:30. But this one, it'll show you the pre-market gainers. It's just the gainers will be delayed by 15 minutes. But that's actually fine in most cases because if it's on this list, then it's easy to just pop it into Thinkorswim and you can get the real-time price from inside the trading software. So the stockmarketwatch.com is a good place to get that information. There are other ones that you can pay for, of course. If you're doing this and you want to, actually really start making like real money with it, then you'd probably want to pay for something like Trade Ideas or TC2000 or one of those. But if you're new and you're just experimenting, when I was first getting started trading, I used this site like all the time to get those pre-market gainers. All right. I think that is it. Yeah, stockmarketwatch.com. Cool. All right, guys. If anyone else has other questions, feel free to either tag me in the chat or you can always email me either info@lazyfa.com or chris@lazyfa.com. Either one will go to the same place. And that is all I've got for you tonight. Oh, there's one more question. Slightly off topic. Do you think European and Asian markets can give a slight understanding of the direction of the movement of the U.S. market? Yes, I do. I don't personally trade in European or Asian markets, so I don't really know how, I wouldn't know how to interpret it, to be honest with you. But I do know that in general, if Europe and Asia are tanking, you usually wake up and find the United States is also tanking. So, but I mean, usually if I'm interested in what's going to happen the next day, I just look at like the ES futures. Oh, there's a Twitch question. Good question. Is there a repository of Stockfetcher scripts that people have made available that you know of? Yes and no. I don't know if this is available if you are not a member. Let me actually log out and see if I can still get to this. Forums. Yeah. So it looks like, yeah, there's a filter exchange. This might be impossible. So yeah, there's a filter exchange. There's a discussion forum here where you can search for stuff and make posts and whatnot. And you can ask for help. And by the way, Stockfetcher it's not free, but you can use it for free. They just limit how many results it can show you. So you can, I think you can use like basically all of the features. It'll only be limited to like 5 results. So you can go here and experiment with it for free and, post on the forums and look at some of the filter exchanges. There are seriously, there's actually some pretty crazy scans that people have written that create like really amazing, they return like really amazing charts. And there's also like back testing and stuff too, which is really, really useful. If you've written a scan, you can like back test it over the past like 2 years and see how it would have performed. So there's a ton of features on this thing that I don't even use. Like I really just use it for scanning for ideas. But there are like a million other things that I can do that I probably should use, but I just don't. Okay. Cool. Well, thanks, guys. Let's cut it off for this evening. It's been about an hour. So thank you, everyone, for coming. And if anyone does have any other questions, once again, you can either tag me in the chat or you can hit me up at info@lazyfa.com or chris@lazyfa.com. Either one of those will go to the same place. And I'm happy to help in whatever way I can. So thanks very much for coming, and we'll see you next time.